I guess we'll get started. Welcome, everyone. Thank you so much for joining. And if you have any questions, feel free to stop and ask questions, either chat or directly. But today we are going to discuss Toast. Toast is a restaurant technology company, and we'll discuss it for about 15-20 minutes. We'll give our overall recommendation as well. And in the meantime, as I said, if you have questions, feel free to ask. So why are we covering Toast? I'm always interested in companies that are small today, but they have the potential to become really large over the next 5, 10, 15 years. And Toast, they went IPO in about 21, right after COVID, or during COVID, I should say. And they are still a pretty young company, about 11, 12 years old. And they're doing pretty good in revenue. So I thought, well, let me just take a look into it. So this is, if you have never checked it out, or if you didn't even know, some people don't know, Toast is a public company, and their biggest product is point of sale for restaurants, which they show in this video. How I came to know about Toast was about 6, 7 years ago. I started seeing these terminals, point of sale terminals at restaurants. Some of the restaurants we would go to, I would talk to these people, the servers and the front staff at the restaurants, and I would ask them how they thought about the product, did they like it or not, and overwhelmingly, most people said they liked the product. So I got more curious, kept looking into it, even when Toast was a private company. And also I was working at Square at the time. So it made sense for me to be aware of who else is in the market, because Square also caters to restaurants as well. So I started looking at it, and then I kind of built a thesis around why it might be a good investment, and we'll go into that. Also, I looked at some other competitors like Clover. You might have seen they have this really fancy white colored terminal, typically for restaurants. But one thing I learned very quickly was Clover, very early in its journey, got acquired by First Data, which is the traditional payments processing company. So their innovation kind of stopped ever since they basically got acquired. So then it's primarily right now a battle between Square and Toast. But Square has multiple products focused on multiple industries. Toast has one product focused on, or I should say one suite of products focused on restaurant industry. So let's jump in and look at some numbers and some graphs and charts and see how Toast is doing and whether it's a good investment for the long term. So if you look at it, Toast, and by the way, you can go to Xillion. Xillion, you can search for Xillion on Google. And if you search for Xillion, we should be the first result. If you go here, our product that we have, it's called Analyze. You can log in, and as soon as you log in, you can go to Analyze, and under Analyze, all these stock analyses is available. So you look at Toast, and here it is. It's overall, if you look at 3 months, it has grown 26%. So it has grown quite a bit in the last 3 months. 6 months, 88%, year to date, about 47%. So overall, this year it has gotten quite a big jump. 1 year, still about up 30%, but it saw a dip late last year. And then if you look at 3 years, which is when they actually went public, everything was high in 2021. So they opened very high. I think they were like a $30 billion company or something like that. And then they crashed. And then I bought around May, June of 22. And then since then, it's been slowly but steadily going up. But it is at 52-week high. So this should be noted, right? I mean, it's not a cheap stock from a historical price standpoint. It is at a 1-year high. It's a 15 billion market cap company right now. So it's not a teeny tiny company, but we'll see that it's at 15 billion. It's still a small, much smaller company. And for a comparison, this is about a thousand. It's about 100th the size of Amazon, for instance, and 200th, 1/200th the size of Apple or Nvidia or those companies. So it's still a very, very small company. Overall performance, we just reviewed it. It has grown about 30% over the last 1 year. So the performance, stock performance itself is pretty good. Its valuation, overall, the valuation is okay. Price to sales is 3.64. So its market cap is 15 billion, and we'll see the revenue is actually pretty high. And it's about $3.6 in market cap for every dollar in revenue. So it's not super expensive, but it's not cheap either. So as compared to its peers, 63% of Toast's peers have a higher price to sales ratio. So it's kind of on the cheaper side. Price to earnings, it's 40. S&P is 24, 25. Long-term average of S&P is around 18, 17 or 18. But high growth companies always optimize for investing in their own business. So their price to earnings is usually high because all the gross profit that they make, they're actually putting all that money back into the business to grow the business. So they really don't want to take the profits. So overall, price to sales is, I would say, attractive, and price to earnings is not super bad for a high growth company. Now let's look at growth. This company and overall earnings per share, again, because they are not focused on earnings, it's not a true metric right now. But if you look at their sales growth, year to year, quarterly sales growth, 31%, which is by industry standards considered very high growth. Very few companies are able to grow at faster than 10% historically over the long term. But for the last 5 years, they grew at about close to 60% year over year. So stellar growth overall. They basically have come to dominate the restaurant market. And they're growing faster than 86% of their peers. And keep in mind that their peers are also tech companies. So they're growing at a very, very fast clip. Earnings per share, again, as I said, I'm not going to focus too much on it right now because the company is not optimizing for earnings at this time. Let's look at profitability. The profitability overall, we give it a low score. Why is that? Because their gross margin is pretty low. And if you compare it with tech companies, most tech companies will have their gross margin in the range of 80, maybe 90%. Software is a very high gross margin business, but they are not a pure play software company. They're also a payments company, and in payments, the profit margins are lower. So we'll look into their business a little bit more, but keep in mind that this is a big chunk of their revenue comes from payments, which is a lower margin business. Some of their sales come from software as well, the subscriptions, and that's why it is not single digits, it's still double digits. Net margin, they're not focused on it. So even the operating margin, net margin, they're just plowing money into hiring more salespeople, giving better deals to restaurants, and just expanding their market at this point. So EBITDA margin and operating and net margin are of course negative. So yeah, and again, gross margin is behind 94% of its industry peers because they compete with tech companies, and tech companies have extremely high gross margins. Now, there are a few other things, and this is something that we are the only platform that gives you this information, the leadership quality. So if you go to Toast and look at their company leadership, I want to focus a little bit more, and we have given it a leadership score of 5 out of 5. So we think their leadership is 5-star. Why is that? And our summary is that the CEO, Aman Naran, and the president, Steve, they both have been with the company as co-founders from day zero, basically. So they've been with the company for 10 plus years, 12 years, since its inception way back. They're both MIT graduates, so they're really, really smart people. And the third co-founder only left last year. And so if you put all, and Aman, the CEO, he actually became a CEO last year in 2023, which means he's still a pretty young CEO. He probably has another 15, 20 years to go before he thinks about, hanging his boots and retiring or moving on. So it's his baby. He's still taking care of it. And I think between Steve and Aman, we have a very strong leadership for the company. That's why it's 5 out of 5 score. And take a look at this. Aman and Steve, president and CEO, long timers, also a stellar leadership team overall. And also, if you look at their board members as well, a pretty strong board as well. Now, the other thing is and again, looking at this, BS and MS in computer science from MIT, Aman Naring is cream of the cream. Similarly, Steve, BS in MIT, BS from MIT. And they all came from a company called Endeca, which was acquired by Oracle back in 2010, 2011, somewhere around that. And so they have known each other even before they started Toast, which goes even farther in terms of leadership quality. So yeah, strong leadership is always a huge plus for a company. And that's what we reflect here. Product diversity. This is something that, again, we've given 4 out of 5 possible stars. The 1 star missing is because Toast is still mostly serving US market. They've tried other markets, but they're not very strong outside US. And that's an area of concern. Other than that, if you look at their products, you can see that they basically are, Toast is an ERP company for restaurant business. What does that mean? Just like, if you are in, any kind of major company business, SAP or Oracle are the ERPs, right? You can't run your company without one of those company software. For a restaurant, Toast is becoming that enterprise resource planning tool. Everything that you need to do, whether it's to pay your vendors or so, like you can see that the products are kitchen display system. How do you convey what order needs to go at what time to your kitchen staff? They have that. Mobile order and pay. Point of sale was the original product. Online ordering, takeout. They innovated so much during COVID. All these products came out very quickly during COVID, and I was blown away by how quickly they were able to offer new products, new offerings during COVID when everything turned upside down. And if you look at it like payment processing, right? I mean, paying to their vendors, you name it, they have it. If you are running a restaurant business, they actually have all the products for you, reporting for you, that payroll, you name it, everything is there, even capital. A friend of mine, just a coincidence, a friend of mine who owns 4 restaurants, he bought the running restaurants. He didn't start them from scratch. And 2 of those had Toast, and he was so impressed. He said he was going to rip out the systems in the other 2 that he bought that had systems from other companies, and he's going to put Toast systems in. That's the kind of brand loyalty and also the product, strong quality of product offering that Toast offers, that people are really, really compelled to just stick with them and actually use the product. So that's why we have still a very strong score in terms of their product diversity. Even though they are one segment, one vertical, which is restaurants, but they are the best in that category. And what we have found through our research is a company that comes to dominate a vertical tends to do very well in the long term because they kind of become a monopoly. Or they could be part of a duopoly. And in this case, Square and Toast could become duopoly. Between the 2, they would pretty much own the market for restaurants. Another thing I want to talk about, feel free to ask questions if you have, but I'm going to keep going. Pricing. They kept, and this is again, a very, very smart move by the leadership very early on. they kept their pricing very straightforward, very simple. It's actually, you can just see it right here, and you can buy a standard plan, or this is like 3.09% processing, right? And you see it's transparent. As a restaurant owner, I've heard it from my friends who own restaurants, that there is so many moving parts that you cannot afford to have lengthy conversations about payment contracts and all that with your vendors. So you like the transparent, easy to understand pricing. And Toast absolutely wins on that. If you're a bigger restaurant, you're going to negotiate your own deal. But if you're a small restaurant, you just want to get started, it's a pretty straightforward thing. So 4.5 stars for that. So very, very strong thing that is going for them. And one thing I should also mention is, as they've grown, they have kept their pricing still pretty simple, which is huge. Revenue. Let's look at the revenue, profit, and other numbers. Look at this graph. I mean, this is 2019 to 2020. Actually, 2020 in COVID, their revenue, I think, at one point went close to zero when everything got shut down in the US, mid-March, early March, somewhere around that. But they innovated so much. It still wasn't a very high growth year, but they not only survived, they set themselves up for huge success down the road. So the products and offerings they launched in 2020 led to doubling of revenue in 2021 as the economy bounced back and people started getting more takeout and so forth. And that story has continued. They have added more than $1 billion from 21 to 22, another $1 billion from 22 to 23, and it's actually going pretty steady, the growth. So very, very high growth company overall. Look at the quarterly numbers as well, not just year over year quarterly growth, but even sequentially, Q1 to Q2 to Q3 to Q4, consistently they're showing growth. And again, we are missing some data, but overall, you can see the growth from the heady days of COVID is coming down, but it's still at a very, very healthy 30+%, which is remarkable growth for a company that is doing multiple billions of dollars in revenue. If you look at the trailing 12 months, again, a wonderful picture here. They're doing really, really well overall, growing their business consistently. I'm going to go a little bit into gross profit. Again, their gross profit is growing. They're making close to $1 billion. They made close to $1 billion in gross profit in the last year, but they're pouring all of that money into growing the business. And even on a quarterly basis, they're at close to $1 billion in run rate in terms of gross profit. And again, profit is growing at 40-something +% as well. And as I said, once they're they're either a monopoly or part of a duopoly, the profits will continue to grow at that point because they will have more leverage in terms of pricing. Trailing 12 months as of Q4 of last year, they're at 834, but it's growing even more. The gross profit. Operating income, again, they are still taking losses here because they're investing in the business. So nothing much to see here, but it's shrinking. The overall loss is shrinking on a quarterly basis and on an annual basis. Net income as well. It's the net income loss is actually shrinking as well. So I would imagine them to be profitable in the next 1 to 2 years. When that happens, they could likely get added to S&P 500, which would likely give them a bump as well. Once a company becomes part of S&P 500, inevitably there's more demand for shares. They're part of more indexes, more ETFs, and they are likely to get a bump in their share price. If you look at price to sales ratio, it's consistently under 4, which I think is pretty healthy. As an example, a typical software business will be close to 8 or 10. Typical pure software. But because this is a payments and software, it's slightly lower, but it's pretty consistent. As long as they keep growing revenue, the number will come down and then the stock price will go up and this will come back up. So I would imagine this to stay close to this. Margins, we have briefly discussed it, but overall, the losses are shrinking, which is always a good sign. So this was over. So based on all this information, what is our overall take? Our overall take at Xillion, based on our years of research, is that this company is likely to be a long-term winner. And in the long term, I would say the 2 to 3 main levers of success for a company are how fast they're able to grow their revenue and how many products they're able to launch. Because at some point, each product's revenue starts plateauing. So if you launch more and more products. So this is a key to achieving long-term success for a company. But to achieve product diversity and product leadership, you need great people leadership. And in this, I believe, since the leadership team has not indicated they're going to leave anytime soon, with the leadership of Aman and Steve, I think Toast is in for a lot of growth over the next 5 to 10 years. So if you want to buy Toast and hold it for the long term, I think it would not be a bad idea. I own it, full disclosure. I own Toast in my portfolio, but somewhere between 5 and 7% of my liquid portfolio is Toast, between IRA and my other accounts, brokerage accounts. And I'm a big believer in that. And I'm not planning to sell for another, say, 5-ish years or so, because I do believe this company at 4 billion in run rate revenue, I can see where they can actually become a much higher, say about a 20 to 30 billion in revenue, and potentially up to 60 to 80 billion in market cap over the next 5 to 10 years. I think they have the potential to do that. If you have any questions, hello, welcome. We're actually at the fag end of this presentation, but feel free to ask questions. And I just summarized that our overall recommendation for Toast is that it's a strong buy and hold company for the long term. We cannot say anything that could happen over the next 2 months, 3 months, 6 months, even a year, but I think 5 years from now, we'll look back and say, hey, they were doing $4 billion in revenue by 2023. And I think if this growth trajectory continues, which I think it will at about 30%, 25 to 30% growth, they will likely be doing, 15 to $20 billion in revenue in less than a decade. And with 4 to 5 price to sales ratio and improved margins, we are looking at 60 to 80, maybe even $100 billion in market cap in about 10-ish years. And I'm a long-term investor. I started investing in Toast in about 2 years ago, and I'm still buying more and holding for the long term. So this is full disclosure. So that's the summary about Toast. Feel free to ask any questions you might have. I'll stick around for another 5 minutes or so. There are no bad questions. There are no silly questions. Your questions are always welcome. Please feel free to ask them in the chat or on microphone.